Is that
All right. Hi, guys. Good day. It's 11:19, so it's almost midday here. And okay, I think I forgot to.
that's good?
Mahendra, Mahendra, I think you have to use a headphone on your end.
I can. Just 1 second.
So, hi, guys. And meanwhile, we're gonna wait a little bit. That's better and good. Perfect. We're all set
Awesome.
to. That was the missing piece. So, hi guys,
Awesome.
me here from Region Appeal, and I'm sitting here in Brampton, Ontario. For those of you who are joining us on Facebook, I want to welcome you. Thank you for joining on Instagram as well. If you're hopping on now or after the fact and you've got a question, we'd be more than happy to answer any of your questions for you. Today, I have with me Mahendra Singh, who is no stranger to quite a bit of you. He's been on a live before, and we want to touch on insurance and families. Some of the things to look forward to, some of the things to look for, and the importance of insurance at different stages in your life, I guess, and when you should start, investigating and taking advantage of it, and why it's important. Mahendra?
That's right. Hey, good morning, all our Facebook friends and family. Good morning, all of our followers on Instagram. Minnie, thanks again for the opportunity. I'm excited to be on. I'm excited to be on to talk about this exciting topic on insurance.
Yes, yeah, good.
Okay, 1 second. All right, we're good there.
Yeah.
Good. I believe we're gonna make a great impact. Are you hearing an echo? Let's just make sure we're good first.
We're good, yeah.
We are? Uh,
Yes,
all right. Good. Good. I hear myself on your side. What- mm,
I'm fine.
Okay. Yeah? Okay. I'm hearing myself back. Okay, guys. I can work with it. That's fine. Yeah, it's good. It's good, Minnie. Thanks.
Okay.
Okay, guys. Yes, once again, good morning. And today's topic is very interesting. Um, it's more about protecting your loved ones via life insurance planning. And that is something that we talk about every day when it comes to protecting our families, protecting our businesses. And as you guys know, we are sitting in unprecedented times, with this pandemic that's still on. We're in another lockdown. And, we always think about this. God forbid something happens, to the major breadwinner, either of them in the household. A lot of times today it's the other party that has to worry about carrying on with those obligations, right? So life insurance planning is absolutely an essential part of our estate. It's an important part of our family planning, and I think it should be an important discussion um, that should be addressed every time, with families and friends. So, yes, so we're going to get right into it. Can't wait to answer any questions you guys have, but we're going to touch on the basics to begin with. So, Minnie, would you like to start out with any questions
Yes.
first, or should I
So,
just? Mhm.
yeah, sure. So one of the things is that, Mahendra, let's start with the individual. Okay. So if I'm an individual leaving out the families, let's look at if I'm single, would you consider is insurance something that you would should consider? Because we know a lot of people, it could be single after marriage, or this most, what I'm referring to is single meaning before you got married, right? After your university and you get your profession. Is insurance something that you should be looking at between the age, let's say, of 19 to 24? How would you address insurance with that particular age group?
That's a great question, Minnie. I have a lot of clients that have children that are in the age group of 18 to 25. And the first thing they say to me, well, Mahendra, I'm not married. I don't have kids. I don't own a home. I don't think I need life insurance. And I always would smile because I would ask them, hey, do you work right now? Is there anybody that depend on your income? Right? So what life insurance really is a replacement of your income, right? God forbid something were to happen to you, right? This plan that we are setting up actually, number one, takes care of your final expenses. If you're young and out of school, you probably have some OSAP. So what would happen if something happens to you? Are those obligations going to be passed on to your family? Is that what you want? Right? Then I have cases in our company where a lot of young folks got diagnosed of some severe illness and there's no money to take care of them. And with our type of planning that we do, we pay out what you call a terminal illness benefit while the person is alive. That helps the family to take care of their son or their young daughter, going through those trying times. And we have examples and examples of those that I can relate to all the time. So is it necessary? Absolutely. Absolutely. Because life insurance at the end of the day is not for you. It's for the ones you're leaving behind. If
Okay.
that answers your question, Minnie.
Yes. So if you're an individual, you're looking at final expenses or and expenses that you would have incurred. So you've got university fees, you might have a car, things like that. Do you want to leave that necessarily to your family, your parents, right? In this
That's right.
case, it's
That's
something
right.
important to look at, and I would consider that being a responsible individual, right? You want to be a responsible young adult in that age group, and thank you, Soel, for letting me know she was hearing some feedback, but it's much better now. Thank you. Appreciate it.
It's much better now. Yeah.
Now, so you want to be a responsible individual, a responsible young adult, and look at what Mahendra was saying there in terms of, having some sort of insurance to take care of the debts that you would have occurred. Because when you love your family, when you want to take care of them, these are some of the things that affect them in the material world that we live in, right? Um, Now, the second thing that I wanted now, so we've touched on, just finishing university, young adults. We want to look at which we would categorize now as so your young couples that are married. So before the kids, and then when kids come on board, how do they plan and why, right?
Definitely. And I think many, both of us can relate to that because we're young families ourselves, right?
Yes,
And I love what you said earlier. It is a whole responsibility factor. And sometimes I ask people, why is it that you don't have a plan today? And some people would say, well, it was a cost issue. Some people may say, well, I didn't quite understand. And some folks may say, well, I never got around to it, right? And I agree, those situations happen. But at the end of the day, when you do think about it, it's all about your responsibilities, right? So when you're looking at yourself as a couple, I love to call it your last love letter. you know, how much do you love your better half, right? So, I mean, just think about it. Look at the needs. Everything that I do is needs based, right? So if you have a mortgage for let's call it simple numbers, Minnie. I mean, you have a mortgage for 700,000. You have another 100,000 of car loans and credit card debt and line of credit and all that stuff. That's about 800,000 of liabilities. God forbid something happens to you, the breadwinner. What happens to number one, your home, right? Is your spouse gonna walk? If there are kids involved, are those kids are going to have to relocate and change their friends, right? Look at the whole emotional aspect that happens, the whole ramification changes, right? So this is why we always say when we're building a financial house, just imagine a physical house in front of you right now. Imagine you're building a financial picture of that house. Life insurance is the very base, is the foundation of that house. Because if you have everything else but that, guess what? If something happens, you're pulling money from everywhere and that financial house crumbles. You're pulling the kids' education funds, you're pulling your savings from the bank, you're pulling everything in your checking account to pay for a funeral, you're pulling your savings, you're asking families, you're borrowing money. Think about it. What's better than having than being self-insured or being self-sufficient. So one of the things I teach families is, especially young couples that have children, many, we talk about number one, you're protecting yourself from two risks. One, you're either dying too soon. You're either gonna die too soon. That's one. And number two, you live too long. What is it? What does that mean? Dying too soon is dying too soon, prematurely speaking, and leaving all these obligations behind for your family. Living too long is you living beyond 60, 65, whatever you call retirement as in Canada, right? With no money or with very little resources to continue on to 85 or 90. Think about a life in poverty practically. And I think that is about 50. They did a research back in '01, and I think the stats are about the same, where they said about of every of every group of 100 retired folks, 54 retires dependent on the system. And another 36 out of 100 go back to work. Think about that. Look at those stats. That leaves us with 10%.
That's right.
10%. What about the 10%? 5% will be deceased out of 100. So that leaves us with 5%. And only 5% actually made it. And you know why? I think it has to do a lot with financial literacy and empowerment. And
Yeah.
that is what we do. My company, I'm so proud to be affiliated with Primerica, if I may say. And since 1977, we have been practicing and preaching financial literacy. Now the government has commissioned task forces to actually enforce different wisdom in school and different things in workplaces as it relates to financial literacy, getting people out of debt. This is not something the big banks want to teach people. I'll say it frankly. And that is something that we teach, right? So getting out of debt, having proper life insurance protection, and becoming financially independent is all intertwined because
Mhm.
one actually would rock the other. It's like a boat with two oars. You cannot have one, you have to have both, right? Otherwise, you're going in circles, or sooner or later, you're going to be underwater. So, yeah, I hope that little expansion on it kind of puts a little more, a little better wrap on the answer you were looking for.
Yeah, and one of the things I want to touch on or elaborate in terms of for you guys, I am in real estate, and the reason why I brought on Mahendra today to discuss insurance is that buying a client or a family a home, we want to be able, or one of my goal and the way I run my business and with my team is we want to be able to, like you said, educate and protect that client. It's not just about buying the home and putting them into the home and then what, right? We want to be able to protect them. And the things that you mentioned there is that I think you said it was 30% of the retirees, end up going back to work. And I'm seeing that as well in real estate. Some of the purchases that are being done today, I mean, the clients are well into their 60s, close to their 60s, right?
Wow.
So so you have your immigrant families that are coming, and when they come here, they want to be able to have their parents here, and the parents might be in their late 50s, and they're still independent. They may not want to necessarily be with their children. There's a lot of families like that. So they're
Right.
purchasing their home now and they have to go to work, right?
That's
To
right.
be able to do that. So insurance is really important because now they're taking on a mortgage in the latter part of their life. That's
That's right.
one. I'm seeing more and more of that happening. Um, the other thing that you mentioned, your final love letter, I guess is the term that you use. And you get married with that age group and your first your couple. Then what happens if something goes wrong? It's so sad. I mean, quite a bit of young people have passed within the last year or so. And I'm thinking, gosh, I wonder if they had insurance. It's sad to see if they have to sell their home. And if there's only one person, like you said, as an income
That's
or
right.
sole breadwinner, right? So we want to
That's
make
right.
sure. Um, Sorry, I'm moving up all the messages from my phone because they're popping in as I'm on. And you want to make sure that you are, when I sell a home, the next thing I want to be able to do is make sure the family is protected and connect them with a professional like yourself to be able to see how can we now protect this family that's living under the home so they don't lose what the roof over their
That's
head
right.
because we didn't take that few minutes to say this is what I think you should do next and here is why. Um, one of the things that I wanted to explain just briefly So there is a difference between life insurance and mortgage insurance, right? So I will give an example, just a very brief summary of, the basic analogy of what it is. So mortgage insurance, if I may, on the real estate side. So we're taking a mortgage. So you're moved into your home and you're taking a $500,000 mortgage, a $500,000 mortgage. The mortgage insurance is going to cover that $500,000. God forbid something goes wrong, and you've paid off $100,000, or 10 years from now something goes wrong and you've paid off 50% of that mortgage. So you're left with $250,000. Should something goes wrong, the mortgage insurance is only going to fulfill the balance that's left, which is that 250. And with life insurance, it depends on the face value of that insurance. So let's say today you're purchasing a face value of 500,000, and 10 years from now, same scenario, something goes wrong. We're looking at that 500,000 minus whatever admin. There's all the same, guys. There has to be a cost for everything, because there's an individual that's working on your file. So minus administrative expense is there. It's in everything that you do. You can package it, put it under, however, but there is a cost. Less that cost, that's what you're getting. Am I right, Mahendra?
That's right. Absolutely. Nothing comes free.
Yeah. So that's one of the basic things. So I usually said to
Mhm.
my clients, your mortgage broker is going to educate you on mortgage insurance. I'm not qualified to do that, but we know what the basics are. So we want to encourage you to look at life insurance for your family. What are some of the things, crucial things that you've come across in your experience in terms of why you would press on families when they do a purchase of their home? And for me, I see it one. So we touched upon the individuals that are not married yet. So they have university expense, they have car, expense and things like that. But the driving force, or the greater group for me, is people who are married and bought a home, because the debt load now becomes higher. Am I right?
That's right. Right.
So what would
That's
you like to say to those groups, to say, get started on it and give them some average cost? I know you can do cost analysis because there are health factors available, right? But, for someone who doesn't know, what would you say?
Yes. This is a very, very wide topic, Minnie. And yeah, thanks for bringing it up, because I've found a
I'm
lot of families.
gonna have to call you back.
Yeah. Yeah, I find a lot. This is a wide topic, Minnie, and a lot of families that I met in the past. My God, there's so many examples the way people were impacted by mortgage insurance. Now, it's not bad to have mortgage insurance. First of all, if I meet someone with mortgage insurance, I must congratulate them for thinking about protecting something, right? However, there are differences between mortgage insurance and actual life insurance, right? So, first of all, life insurance is not something you can just buy. You have to qualify for it, right? That is very important to know, right? So sometimes I meet folks who are young and they say, "Well, I'll get it in 5 years, or I'll get it when I'm married," right? What they don't realize is every day of their life they're getting older and their health is not the same, right? But when it comes to the point of mortgage insurance, what I find is it does not meet the needs of the family adequately, because what does it cover? At the end of the day, it protects the lender. It covers the remaining balance of the mortgage. Am I right?
Yes.
Right? That's one. How about your family? How about your kids' education plan? How about lifestyle? How about income replacement for that spouse? Continue living in that home, because it's one thing to pay off a mortgage, but after you pay the mortgage, what's next? You still have the utilities, you still have the property taxes, maintenance, you still have to carry that property, right, Minnie? You know better about that than I do, right? Plus, you have the kids that are now growing up. If the kids are 9 and 12, like mine, right, they're now growing up in that environment, maybe in another 10, 15 years of their life, right? So, what I talk about is number one is the quality of the plan you have and what it covers, which is you need term life insurance versus mortgage insurance, because the mortgage insurance only covers the mortgage, but your term life insurance would actually cover the mortgage, cover your other liabilities, con- cover the replacement of income for the remaining breadwinner, right? And much, much, much more, right? One of the things that people don't realize, Minnie, is with mortgage insurance, you're actually paying a fixed cost over a period of time, but the benefit actually reduces as you pay because you're only covering the balance of the mortgage. And the premium does not go down. The premium stays the same or goes up on renewal. And
Yeah,
on renewal, they may ask you those questions again, and you may not be able to qualify.
that's right.
But right? But if you had a 35-year level term, you don't have to worry if you're renewing every 5 years and requalifying over and over. You don't have to do that because we have covered that obligation already, including your family obligations, right?
It
And
is also important, Mahendra. So I had a client, retired couple who purchased a home. So they had investment income coming in, and they had their pension and things like that. So with this, so they purchased along with their child in up in Hamilton, and because of their age, if they were to get that insurance, it would have cost them 300 and something dollars for the mortgage insurance, which is just a 400 something thousand purchase. So we ended up, the daughter did have life insurance, but I mean, the life difference, right? Who are we protecting really, right?
that's right. That's
So
right,
that
Minnie.
was, if the parents had life insurance, even when they were in their 40s or 50s and were able to take a 20-25 year term or whatever you would have recommended, that would have been ideal because they would be moving from one house to the other, one property to the other, and still being able to cover that face value of insurance that they purchased.
Absolutely, absolutely. And one of the things that we have to realize when buying properties and getting these mortgage insurance is the mortgage insurance is a post underwriting product. It's not a pre underwriting. So what I do with my clients is we ask them all the health questions, right? We get them to do a medical, compliments of our company. They don't have to pay a dime for that. Okay. So we get that done up front. So we know right off the bat that, hey, this client is okay or they're not. Okay,
Hmm.
uh, instead of paying for mortgage insurance all the way through for the rest of your mortgage life, and God forbid something happens, and that's the point you realize that, oh, we're not covered because of an undisclosed medical condition or something that they did not ask me
Yeah.
because the questionnaire is not that comprehensive. You know what I'm talking about. The questionnaire on mortgage insurance is very, very brief. It doesn't cover everything about your medical history, right? So we have there is a channel on YouTube. It's called CBC Marketplace, and it shows some horror stories on this. So anybody on the call can go check that out later. So just be careful, guys. It's important to know what you're buying, know that it's going to protect your loved ones. We're not protecting an institution here. We're protecting your family. And I think that's the most important thing. And there is no feature, Minnie. There's no feature in mortgage insurance that gives what you call a terminal illness benefit when the person is alive. God forbid they get diagnosed of some terminal disease or something like that, right? But in with our product, we offer up to a 70%, between a 40 to a 70% payout while that person is alive if they were to get diagnosed of a terminal disease. For example, a university student with a $500,000 coverage who thinks he doesn't need life insurance, what if he gets cancer? What if he develops some lung disease and he's pronounced, he got 4 months to live or 5 months to live, right, Minnie? Will pay out up to between 40 to 70%, depending on the circumstance, will pay that lump sum. So even at the minimum of 40%, he gets $200,000 while he's still alive to take care of his health or to travel the world, satisfy his last wishes, take care of some of his goals, his bucket list, whatever he wants to do, that's okay. And we have many cases in our company where this person who was pronounced, they were given like 4 months 20 years ago or 10 years ago, they're still alive today because they were able to utilize those resources and take care of their health
Yeah, and that's a
you
crucial
know
part. Like, I have two daughters, and the reason, so most of the people on my team, it's either and the reason why I would sort of endorse or support it's because, I've used them myself. So my Mahendra is my insurance person, and when I look at it, the reason why I am taking insurance is to make sure my two girls, God forbid something happens to me as a mom, as the one, financially is supporting you. I want to be able that to know that they are taken care of, right? And let's say something does go wrong to me, it's let's praise God. Nothing's gonna happen, right? But you know, you want to. I want to make sure that there is finances available. If there's any health issues, to be able so that they can still maintain a certain standard of living, right? I brought them into this world,
That's
so
right.
I want
That's
to
right.
be able, with blessings and bounties, to be able to take care of them the same way. If something like you said, like an illness that happens, where you're going to get that, 40%, 50%, is it 40 to 50 you mentioned?
40 to 70.
40 to 70, so that they're taken care of and it's not this shock, right? That it's there, right? For them.
That's a great point, Minnie. And I would like to add one quick thing. When I work with clients personally, one of my goals is to help my clients to become practically self-insured. What do I mean by that? If you have, for example, a 20-year level term or a 30-year level term, right? You're renewing that policy in about 30 years from now. However, what I would show that client is, look, if you're 30 years old today, 30 years from today, you're 60. Let me show you what I can build for you in terms of assets. Okay. And that is very, very important. I'm not sure. I don't see you anymore. Are you there? Okay, good. All right. Yeah. So, what I show my clients is to become totally self insured by building investments from today. Don't wait until you're 50, 60, or whatever age to build investment. Build investments so you can have that asset available. At the end of the day, we don't want life insurance. We don't want investments. We want money.
Mm-hmm.
When families die, their loved ones don't care whether the money came from a life insurance policy. They don't care whether it came from an investment plan. They don't care whether it came from selling a house. They want money. So whatever it takes to deliver for that family. So while having that life insurance, I'll show somebody that, hey, let's invest. And Minnie, you and I have done this. You are the student of this already, right? Even though you're in real estate, you're actually investing. Right in what I'm talking about. So when you look at 30 years down the road, you may not even need that life insurance. I tell my clients that you may not even need this policy. You're going to say, well, I have X amount of dollars sitting here, $500,000 in cash. If I have $500,000 in cash, do I need my $500,000 life insurance policy? One is when I'm alive, and when the other is when I'm gone. If you choose to keep both, that's fine. We can have one feed the other, one can pay the other, right? So powerful, powerful is not just to have life insurance by itself, but have life insurance with a plan for investment.
Yeah.
And
Mm-hmm.
I think we both preach that same language. You talk about investing and becoming
Yeah.
financially independent, and I do.
Same goal. So we talk about. So you're talking about life insurance. Same goal. We look at properties and one other. So I'm more of a tangible assets, that you can see,
Of
um,
course.
and you can touch, and so that's got to do with real properties, real estate, houses, and it's the same thing I say to my clients. You're buying a home. We, for the most part, 70% of immigrants in Ontario or in the market that I work in. So we're either coming here as young adults or millennials in our 30s and 40s, and we're building, and we want to make sure that that 30 years that we have before we retire, if we can save $500,000 in that 30 year with inflation rate, with the pay rate, right? Whether you're making $20 an hour, $14 an hour, $35 an hour. So it has to have an investment portion of it. We live in a
That's
material
right.
world. We have to have um, different facets of our life, but to survive in the material world, when we love our families, we have to be able to protect them financially, which is like your investment portion of the asset and the either real estate or insurance. They both go hand in hand, and this is why I have Mahendra here today, because I firmly believe in my heart this is such an important things to know about, to be educated about, to consider strongly um, about. And I remember, if I may, when I came to Canada quite a while ago, I was in my early 20s and I got life insurance. right? So, and I got life insurance because at that time, as a young couple, I mean, paying our mortgage, God forbid something happened, then what would happen to the other person? Right. So I remember at that time there was like a small policy of 250 at that time. So it's very close to my heart. It is very important to consider doing. So I would encourage, if you're looking at this video now and you still have some questions, please do not hesitate to reach out. No question is a silly question. We're here to learn. Don't be intimidated. We're all just two humans just like you that you're seeing on the screen. And this is our field and our line of work. We may not know what anything about your field, and you might be the superstar of that area. So just treat us the same way. Ask us a question, be open. Don't be scared. Say, Minnie or Mahendra, this is a question that I have, or this is what is happening in my life. What can I do now? I am this age. What can I do now? Right. So we want to encourage you to ask those questions. Right. We want to take a moment, Mahendra, if I may, and just say hello
Sure,
to a few people. Why don't you
sure.
post Instagram hello? Can you see all of them that's there?
Yes, I'm gonna do that right now. Divya, hey, welcome, guys. Sadhana, Dawn. Okay,
All right.
I'm
We
scrolling. Mhm.
have Dia, Lolita, welcome. Thanks for joining. Yeah, Sana, thanks for joining. And for those of you who are joining on Facebook, let's do this here. Let me see who's on here. I'll pull this up on my phone.
Thanks for joining us, guys. Really appreciate it.
Appreciate it. And if you have any questions, drop it in the comment section below. Now, one of our goals this year is to educate. And what did you say? You don't use the word educate. We're saying another word,
Educate and empower.
empower. So educate and empower. So the more you share this video, it'll have an impact on someone's life. So if you can share it, we'd appreciate it, right? So we want
Yes,
to be able to
absolutely.
reach out and share, educate along the way. So we have a question here from Canada. What does this got to do with rent again? Okay, Wazim, actually, we're talking about insurance and the benefit and importance of insurance as an individual and as a family as well, right? Um, so rent. So it's not about rent, but insurance and the benefit of insurance for a single individual, a couple, and family, right? Yeah. All
Awesome.
right.
Awesome.
Do we have any other questions? Now, if you want to book a consultation, obviously it is a free consultation. You can reach out to us directly. You can reach out to Mahendra if you've got a real estate question. Drop it in the comment section below. Reach out to me. My cell is on the screen, I believe. Hold on. And Mahendra's
Yes,
cell is there too. So
that's right.
reach out to us, and we'd be more than happy to advise. Let me see. I can. There you go, Wazim Hassan. So Wazim, what we'll do, we'll reach out to you directly. Mahendra, can you reach out to Wazim? Yeah.
Yes, we will. Okay, Wazim.
So we have it in the
Yep.
comments. So we'll reach
Yes,
out and we can do a
we'll
direct
reach
message.
out.
Yeah, we don't want to share
Wazim
your phone number on the
Hassan.
screen, so we'll reach out to you directly.
Wazim Hassan.
And
Okay.
Wazim, do not hesitate to ask any question that you would like. We'll be more than happy to address them for you.
Okay.
Any other questions before we close? All right. So if you don't have any questions right now, and you do later or after the fact, drop it in the comment section below, and we'd be more than happy to address them. Mahendra, is there anything else you'd like to add before we?
Um, yeah, Minnie, this topic is so wide. There's so many. I think you asked me something which I didn't answer yet. One of the things you were talking about is the rates. Give an example of
Oh,
rates, right?
yes.
Yeah, I can give an example of two cases recently. One just from yesterday, I sat with a young mother. She's paying $92 a month for $100,000 coverage. I wouldn't say the name of the company, and her little son of 5 years old, was covered for 10,000. And when I sat with her, I ran her rates and I showed her a total plan. She could get 500,000 coverage for $65 a month. and we're able to invest the difference in her son's education savings plan and capitalize on those bonds and grants. What a difference! What a difference! Example number two. I sat late last year with a young lady in Etobicoke. She was 26 years old, Minnie, paying $300 a month for universal life insurance. She had a total of 500,000 in coverage, which seemed like an okay plan, but she was paying $300 a month.
Yeah.
I was able to give her $1.1 million of coverage for $96 a month. And we invested the difference in RRSPs and tax free savings account, right? And her brother had the same plan. He's only 22 years old. He was paying $200 a month. I got his cost down to about $45 a month for half a million. And her fiance was paying over $350 a month for 500,000, and I got his cost to $109. And in every case, they reinvested the entire difference with me in mutual funds just to get that money going. And these are also potential clients for you, Minnie, because they all are talking about buying homes, buying homes. So I get them started on certain plans to get them ready for that process. So that's why this relationship works so well, right? Right. And one thing I would like to add is the reason people buy those type of products is number one, the agent they sat with never educated them, never showed them what their options are. That's one. Number two, most people never even read their policy. The agent tells them, hey guys, stuck it in a drawer somewhere, take it to the bank, put it next to your will, seal it, don't look at it until you're ready to go. So nobody ever turned the pages of their policy and actually read it to see what is in that policy, right? So I'll pause there because I see Wazim is posting, I think, a question or a comment. All right. Okay, Wazim, definitely. If you're okay with that, I can reach out to you right after our broadcast. All right. Um, Once had after 3 months, he used to work for a company but
You know
lost.
what's so
Okay.
empowering, Mahendra, and such a blessed thing, just doing this and just having Watson reach out. I feel so good that it's impacted someone else's life already. The fact that we're going to be able to share that information. So, guys, that just want to stress again, if you're looking at this video, I mean, share it to any group, any, your family or friend circle, and you've got two professionals in the industry who's dedicated and trustworthy and genuinely cares about building family and protecting them, so they're in good hands. Share this so that we are able to help them. Not in the case, I think, if I'm understanding, like for example, Watson has been with a company for a while and then he's lost that benefit after being with them, right? So
Um,
thank you,
Rabin-
Ravindra,
Thank you,
for
Ravindra.
the thumbs up. Appreciate it. So
And
yes,
Minnie, before we close, after you're done, I have something I would like to add. You can continue.
sure, yes. And so one thing I want to point out too that Lisa was mentioning here on Instagram, she said a common mistake she found is people to make is taking out mortgage insurance over life insurance, and we have discussed this particular question a little bit earlier about the difference between the two. So if you've missed that, you can kind of look back at the video or just reach out to us and say, tell me a little bit more about the difference between the two and how can I take advantage of it. It doesn't cost you anything to reach out and to be, let us share that knowledge that we have, take advantage of that, and learn from it. Right? Would be more than happy to help. Go ahead.
So, all right. All right. Awesome. So, yes, Minnie, that is so true. I would like to give an example of one of our clients. This client actually was a client of one of my associates in the business. And I think she's on the call either on Instagram or Facebook. I think I saw her picture popped up. Um, this is an example where a young mother lost her husband. This was back in 2017, Minnie. And this example ties into real estate a little bit because of the outcome of the story. 3 months before, I think, 3 months before the husband died, their policy was lapsed for 2 months. And right after we got their policy reinstated, the husband died at the age of 39.
Oh wow,
Okay.
that's such a wow.
We We were personally involved in this case. We drove to Guelph. We were able to deliver a $500,000 benefit to that wife, to that widow. Okay. Two little children, one in the Philippines, one in Canada, right? Man, this was a very touching story because this is our personal client, Minnie. And you know what? She was able to reinvest half, at least I think half of those proceeds into her own property. She was able to invest with us. She has life insurance planning done pat, and she was able to own her own property. Why? Because she made that decision with her husband. Each of them had $500,000 of coverage,
Mm-hmm.
and she was able to use a portion of those proceeds to put a down payment on her property. Today she lives in her own property in Guelph. She's able to, now collect rental income and all that stuff. She's a single mom with two children. But look at how we were able to make a difference in that family, right? That is what keeps me in this business, right? It's not the products, it's not the system, it's the people,
Yes, that's
right?
it's yes. You're right.
Right?
The people, yeah.
And that is so emotional for us because we were personally involved. And we saw that family change their lifestyle. There's so many examples. We don't have time for it all, but there are cases where it involves younger folks. There are cases where the folks are in their 60s and 70s, 50s. Listen, guys, it has nothing to do with your age. We don't know when the good Lord calls our number. None of us know that. We're never good enough to figure that out. So why not have the right type of planning in place? We buy car insurance. You know what surprises me a lot, Minnie? We live in Brampton, right? You and I. We buy car insurance for $200 to $300 a month to protect a $50,000 vehicle. Let's use an example.
Oh,
We
I love
pay
where we're going with this. So this is reality, right?
reality.
Reality, real simple.
So a car that's valued 50K or 80K, we pay, a lot of times it's not even 50K in value, but we'll pay $200 to $300 a month to protect that hunk of metal. A house that's valued 800,000 or $1 million, we pay $100 to $200 a month in house insurance, if you know the rates in Brampton. But
Yes,
here, what about this? What about this? Do you have an insurance on the tree in your front yard?
I think so. The bill.
What if every leaf on that tree is actual money? You probably insure it. You probably go cover it up in the night, right? Everything you would do, right? But hey, what is the most important asset? You, your income to your family. That's the biggest asset. Is that hunk of metal in the car or the house that you live in more important than the loved ones you see when you get home? I'm sure you guys all know the answer to that. No. So who are we supposed to protect first?
Yes,
The car, the house, or the family? You answer that question.
yeah. You see
Yeah.
the importance there. The hunk of metal, we're paying, $200-300 of insurance to protect, and we're doing it one not only to protect that, but in the event that there is an accident or a disaster, right? To the individual and the car, and then the individuals that are in our homes, we've kind of not, or some of us may have not thought of it in that perspective. So it's a
Mhm.
really, really good, reality, very simple example of how important insurance is for you and your family, especially when you've got, to protect them with a big purchase asset like that, a home, right?
Yes.
So
Yes.
thank you for sharing that, Mahendra. I appreciate it. We've got a question here from Wazin. Would you like to take a stab at that?
Sure, sure. Hey, Wazim, great question, bud. I'll just read it again to make sure. Quick question. The more you pay or invest in insurance, the more your benefits go up. So, Wazim, the question is pretty much, in my mind, it's two-part because, for one, we do not invest in insurance, right? Investments are separate from insurance. It should always be that way. There are insurance in this country called whole life, where they tell you you can actually invest in the policy, but when you're ready for that money, you really don't get it. You have to borrow it, or you die and leave it to the insurance company. That's how it works there. So I wouldn't intertwine the word invest and insurance, but I'll kind of separate it. Let's unbundle it for a minute, Wazim. So yes, the more you invest, depending on your age, depending on your health, the more you invest in life insurance, the bigger the benefit obviously it's going to be. And the more we invest in an RRSP or a tax-free savings account or an RESP for our children, those registered investment vehicles, the more the tax benefits is going to be, the better the rate of return most likely is going to be if you're investing right. So yes, your question is partially answered in your question, but I just had to dissect it a little bit because I always like to separate the idea of investing and insurance. It's never together. It's always separate. Always keep it separate. If that
Yeah.
answers your question, Wazim.
What I was saying, to touch on what you talk about, car insurance in Brampton is not expensive, I heard.
I
And
agree. I
right,
agree. Totally.
we've got here watching very interesting. Thank you for your zest to make people know you make things simple. We in New York, although border, we understand. Yeah, good. Thank you. Real estate knowledge is
Thank you.
explained like you and your guests make buying and selling a property so easy. Thank you, Tika. I appreciate it. We do
Thank
appreciate.
you.
Yeah.
Thank you so much. Thank you so much. My job is to simplify the complicated.
Well, happy Ramadan to you too. Wazim, appreciate it.
Happy
Rada,
Happy Ramadan, Karen.
and informative chat. Thank you guys so much for sending in your feedback and to let us know how we're doing, right, and how it's benefiting you as well. Thank you, appreciate that.
And thanks, guys. Thanks. And I think in our closing part here, I would like to say, um, me, I don't work alone. I have an incredible team. I'm backed with an incredible system, an incredible company. Over the last year, all through this pandemic, we as a company have paid over 1.7, I think. I think it's 1.8, but I'll just be modest, but 1.7 billion in life insurance claim to North American families. That is a huge deal. That's a huge deal. That's about over $500,000 a day that we pay. So it's just powerful the way we're
Yeah.
able to help families.
Yes, and that's right. So myself as well, local realtor here in GTA, primarily in the region of Peel. I do work outside of Peel as well, Durham region. Have investors that are buying even outside of province. So I want to take the opportunity to let you know that Mahendra touched on one thing. It's not so much as well about the product, but it's really more important about the person that you're dealing with, right? Um, why am I putting insurance or doing this with Mahindra is because I believe firmly in my heart that the family is important, the individual is important, and we want to be able to protect them, right? So I always say buying and selling is easy, but we want to be able to look at. We will not be making a difference if we're just transactional based. And so one of the things that I advertise on my signs and on my social media is that we sell more because we do more, as an example. And this is one of the way I want to strive to do more is getting you in touch with professionals like Mahendra and others from every stage of the transaction, but also after the transaction. How do we protect the family, right? Um, and after a transaction is closed. So I want to thank you guys for joining. We do appreciate it. Talk to you soon again. And Wazim, Mahendra is going to reach out to you and answer all the questions that you have. I would encourage you again to share this video, like, make a comment in the comment section below. Talk to you soon again. Take care and bye. Bye. And Mahendra, thank you so much for making the time for me.
Thank you so much, Minnie, for the opportunity. Everyone on Facebook land and Instagram, take care of yourself. Stay safe.